Hi and welcome to the week ahead video with me, David Madden. Before we take a look at the major events of next week, let's just take a recap of the major events of this week. This here is the US 500. Unlike many other stock markets, it continued to have a decent move to the upside. This was largely fueled by the very accommodative monetary policy by central banks, the reopening of economies as unleashed pent-up demand, and broadly speaking, we've seen strong economic indicators which suggest the economy is recovering. But towards the end of the week, we did see a bit of a sell-off and a subsequent rebound. During the week, we saw higher PPI numbers of the US Producer Price Index, which really underlines the cost manufacturers are seeing is very much increasing. That fed fears that CPI, Consumer Price Index, is going to remain high in the near term, and we're probably in for higher inflation down the line. We also heard from Jerome Powell, the head of the Federal Reserve this week, who said that even though the US labour market is improving, it's still not strong enough to warrant a reduction in the government bond buying scheme. So that actually gave a bit of support to stock markets, and also had a bit of weakness for the US dollar. Now, the update from Mr. Powell was actually in stark contrast to the Bank of Canada, who this week kept interest rates on hold, but they also announced plans to reduce the size of their bond buying scheme. We also heard from the Reserve Bank of New Zealand this week. They've actually announced plans to actually end their stimulus scheme soon. So, we are seeing the beginning of some of the major central banks around the world actually looking to kind of bring an end to their ultra loose monetary policy. So that theme is likely to stick with us for the next few weeks and months ahead. So as time goes on, we could see other central banks heading in a similar direction. This week we also heard from the Bank of England's Michael Saunders. He was saying that the UK economy is improving at a faster rate than expected, and in a relatively short period, it would be appropriate to talk about scaling back the size of its asset program. So there's a bit of a change in sentiment away from ultra loose monetary policy towards a gradually more tighter policy. So this is likely to be a theme in the near term, but nonetheless, the US 500 continues to be in its broader upward trend. If it holds above the recent lows here at 4,340, it's likely the kind of recent upward trend will continue. A move higher from here could see it retest the recent record highs of 4,392, and a break beyond that could see a target 4,400. Even if we do break below this area here, 4,340, we could look to find support potentially from this simple moving average here, which comes into play at 4,327. Now, in terms of the kind of major events of the week ahead of us, the European Central Bank's interest rate decision on Thursday is going to be in theory, the most important event of the week. Although from the European Central Bank, we're not actually expecting much in the terms of change of policy. The Eurozone itself is having a decent recovery, but the rebound in the recovery isn't as strong as the recovery seen in the US, and if the US haven't altered their monetary policy, it's unlikely the European Central Bank are going to move before them. So we're not expecting any major changes of policy from the European Central Bank, but any updates to have in relation to how the recovery is going, or are they fearful in relation to higher inflation, or any potential adjustments to the bond buying scheme, that's going to be very much in focus. Keep in mind, not that long ago, Euro-dollar dropped to a 3-month low. Since then, it has been recovering. While it continues to kind of hold above this trend line here, it's likely the recent upward move will continue. A move higher from here could see a target this zone here in around 1.1880. On a few occasions, it actually has both support and resistance in the last month or so, and a break above that could see a target this zone here in at 1.1974. Keep in mind the kind of broader trend in euro dollar is to the downside. So if we do have a take out the recent low in at 117.71, we could look to head back down towards 1.1730. Also, what's of interest this week is we have the flash manufacturing and service PMI reports from the major economies of Europe and also from the US. So we have the updates from Germany, France, and the UK, and also the US as well. So the dollar crosses are going to be in focus. I've also talked about how one of the UK central bankers issued a relatively hawkish update during the week. Let's keep an eye on the price action of the pound. Not too long ago, in a similar fashion to the euro dollar, pound dollar fell to a multi-month low recently. Since then, it's broadly been recovering. We're not seeing much in the way of higher highs, but we've certainly seeing higher lows. So the broad kind of rebound seems to be continuing. If you can hold above this trend line here, it's likely we could head back up towards this zone here, up towards 1.3938, and a break beyond that could see a target up towards the 1.40 area. If we do fail to clear these highs here, and if we fail to clear 1.3909, that could be construed as a sign of weakness, and it could be a forewarning of the market turning over on itself. If you do drift lower here, support could be found from this trend line, and if you do happen to break below 1.3730, that would be creating a new multi-month low. That would be significant, and it could potentially send the market back towards 1.3716.